There are a lot of great things going on last week. So many that we really didn't get to cover them all in depth. So aside from the cooler than expected inflation readings and the terrific bank earnings, well, let's talk about another huge positive. Last week, we got a very encouraging earnings report from Taiwan Semiconductor Manufacturing Company, a.k.a. Taiwan Semi, or just TSMC for short. The world's leading semiconductor manufacturer reported excellent numbers early last Thursday, which were strong enough to spark a strong rally for basically the entire sector. Yes, this stock is that important. While Taiwan Semi itself was only up 1.5%, by the end of last week, the company's commentary was so positive that the Philadelphia Semiconductor Index finished the week up 5.4%. Even lowly worm Intel managed to become one of the 5 best performing stocks in the S&P 500 last week, up more than 12%. And many other chip plays had huge gains, especially the semiconductor capital equipment names. Let's talk about those. There's a reason these stocks ran. Taiwan Semi delivered 39% revenue growth year over year, 57% earnings growth. These are extraordinary numbers. Neither of those were big surprises because the company releases monthly revenue results, so we had a very good idea of how much money they were really making. But you know what was a surprise? Taiwan Semi's guidance for the first quarter of 2025. In the first quarter, Taiwan Semi expects revenue of $25 to $25.8 billion, which would represent an increase of 33 to 37% year over year. And based on the company's exchange rate assumptions, they're expecting gross margin profit between 57 and 59%, up from 53% in the first quarter of last year. Now, AI, all these numbers, they were substantially ahead of expectations. That's what you need to know. Management explained that the company's strong results in the fourth quarter were driven, not surprisingly, by the high-performance computing division, which encompasses the AI and smartphone end markets, and made up 53% of their sales in the quarter. Taiwan Semi's leadership in manufacturing AI accelerators, like Nvidia's best chips, remains the key driver of their success. The best analog is indeed Nvidia. Taiwan Semi said that after AI accelerator revenue tripled and accounted for about 20% of revenue in 2024, they expect it to double again into 2025. And management thinks the strength in this theme will continue for a while. Over the next 5 years, they expect their revenue to rise at a 20% compound annual growth rate. And AI is the main catalyst for that growth, as Taiwan Semi expects a mid-40% growth rate for AI accelerators during the same period. Now, like I said earlier, the pin action from this Taiwan Semi quarter was extensive, and some of the biggest beneficiaries were the semiconductor capital equipment companies that, well, these are huge makers of equipment that Taiwan Semi buys. Applied Materials rallied 4.5% last Thursday and is now up more than 8% in the 3 trading days since the quarter. Amazing for a supplier. Lam Research gained 4% on Thursday. It's now up 7% over 3 days. KLA rallied 4.2%. Is now up more than 7% since Taiwan Semi's quarter. That is serious pin action. So why did Taiwan Semi quarter spark such a big rally for the semi-equipment, capital equipment sector? Simple. In addition to all of its bullish revenue and margin guidance for the first quarter of 2025 and the positive commentary about its long-term revenue growth potential, Taiwan Semi also disclosed its capital equipment budget for full year 2025. It was enormous. The company expects to spend $38 to $42 billion in CapEx this year, which would be up between 28 and 41% from last year and was well above the $36.4 billion number that Wall Street was expecting. And by the way, management said that about 70% of its CapEx budget would be spent on, quote, advanced process technologies, end quote. And again, equipment to make GPUs and other accelerators, basically chips from Nvidia and their imitators. I was very surprised that Nvidia didn't go up even more last week. It's catching up now.
In the world of stock markets, one question seems to echo louder than others. When will Nvidia go higher? This intriguing query was recently posed by CNBC's Jim Cramer, igniting a flurry of speculation and interest. With Nvidia under renewed market scrutiny, various elements, from profitable supplier earnings to geopolitical tensions, appear to be creating a perfect storm around this tech giant. Key players in this unfolding drama include Taiwan Semiconductor Manufacturing, Nvidia's key supplier, and tech behemoths like Microsoft, Amazon, and Meta, who have paused significant orders. As the stock market awaits with bated breath, the story behind Nvidia's current standing is both compelling and complex. Welcome back to Investocracy.
That robust capital equipment expenditure guide is why the Semiconductor Capital Equipment Group has caught fire over the past few days. Capital spending from the world's largest foundry, and that's a name for a big manufacturing facility, means money spent on the massive big-ticket pieces of equipment supplied by the Applied Materials, Lam Research, KLA, and Dutch ASMLs of the world. The fact that so much of Taiwan Semi's capex budget is going towards advanced process technology is also a huge positive, because those are the latest and greatest and most expensive pieces of equipment these capital equipment companies sell. Now, but there was more to this move than just the explicit numbers that Taiwan Semi put out. While the semiconductor capital equipment companies have been terrific long-term performers and started out last year hot, do you know they've basically been losers for the past 6 months or so? In fact, these stocks sold off in the second half of last year, so only Applied Materials and KLA actually finished the year in positive territory. And all four significantly underperformed the S&P 500 in 2024. Maybe I haven't missed everything here. Throughout that time, the narrative has shifted from immense opportunity represented by the latest chips like AI accelerators to concerns about why the full opportunity might not be realized, whether that's because of some unsubstantiated rumor about delayed production for Nvidia chips. We hear that constantly, right? That drove the stock down last week. Or more recently, the export controls that the United States was trying to impose to limit AI development by some of our greatest geopolitical foes, especially China. These companies gave up billions of dollars in business when Biden cracked down on Chinese ordering. Periodically, concerns also emerged whether the hyperscalers are certainly investing tons of money in AI infrastructure now. Maybe the investments aren't sustainable and will need to be pared back in the future, perhaps substantially. And an uneven process in the market for some of the more basic chips hasn't helped the group either. Long story short, I think the breakout in the Semiconductor Capital Equipment Group is a reflection of investors starting to think, once again, about the scale of the opportunity, not about what's dismal, but the opportunity ahead for these companies. Taiwan Semi's management team spelled out that opportunity so eloquently in its earnings report and the associated conference call last week, and investors finally began to realize that some of the restrictions on some of our most advanced semiconductor technologies might soon be coming to an end as the Biden administration's time is over. I'm not sure about that, but that's what people are thinking. Oh, by the way, of course, on a day when Oracle, SoftBank, and OpenAI also announced plans to spend $100 billion on new AI infrastructure just for starters, I'm also not as concerned about the idea that the hyperscalers might need to slow down their AI spending, partly because I've heard from Nvidia Jensen Huang over and over about the impressive returns on investment that customers can get from their purchase of his most advanced AI product. Frankly, I don't think the opportunity for these semiconductor capital equipment companies was ever really that diminished. Even when their stocks were getting clobbered last year, there was just a perception problem, and it's always hard to move the crowd when a group's out of favor. But with its bullish report last Thursday, Taiwan Semi was able to remind investors how powerful this theme is, remind you how powerful this theme is, essentially resetting the entire narrative for everyone operating in the high-end semiconductor world.
The tale of Nvidia's recent market performance is as thrilling as a blockbuster, complete with plot twists that no one saw coming. On one hand, TSMC has reported earnings surpassing expectations, with $2.24 per share on a revenue of $26.88 billion. This would usually be a cause for celebration, but instead seems to have put further pressure on Nvidia. The world of stocks is indeed a capricious one. Adding to Nvidia's narrative are the geopolitical chess moves playing out on the global stage. Former President Joe Biden's administration has introduced new semiconductor export restrictions to China, which could potentially slice Nvidia's chip market by half. Yet, amidst these challenges, Nvidia's story isn't just about present woes, but future possibilities. The company is looking beyond its current horizon towards the promising realm of quantum computing, a frontier as puzzling as it is exciting. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
This rally is built on the back of tariffs, more specifically smaller than expected tariffs that could grow bigger if countries don't play ball. It's built on the backs of new projects like Stargate, a new AI infrastructure initiative that's backed by OpenAI, Oracle, and SoftBank to put up new data centers filled, no doubt, with orders from Nvidia equipment. And it's cemented by the appearance of all the big tech executives at the new president's inauguration. What a difference from 2017 when Trump's presidency was contentious and a lot of executives didn't want to have anything to do with him. But let's go back to what's really driving today's markets, the tariffs, which turned out to be all bark, no bite, at least so far? Lots of people thought that Trump would kick off his second term by stoking a huge trade war against China. The repercussions would be gigantic. Sure, some money would come into the Treasury thanks to the tariffs, but China might then retaliate, and then we come right back and tit for tat, and who knows where it would go. I didn't see it that way because Trump told me that it might not happen. I want you to take a listen to what he said right after he was elected when I asked him right here on the floor of the exchange about China.
We have a lot of talks with China. We have a good relationship with China. I have a surprising relationship. Now, when the COVID came in, I sort of cut it off. That was a step too far. That was, as they say, a bridge too far. But we've been talking and discussing with President Xi some things and other world leaders, and I think we're going to do very well all around.
Well, he said it. But for many, it's a remarkable turn of events. A light hand when it comes to China. Maybe even lighter than President Biden, who through his assistants would constantly hector the Chinese, chiefly about advanced semiconductors, but also about their dubious trade practices. I think Trump finally realized that we never really got anything from the Chinese by playing tough. They didn't even try to appease us. They gave us nothing. Maybe he's got a plan. But no matter what, the actual tariff plan was a pure under-promise, over-deliver ride post that got Wall Street very excited about a new, more flexible Trump regime when we saw the smoke clear.
Despite the acknowledgement that practical quantum computing may be decades away, NVIDIA's commitment, underscored by their upcoming Quantum Day at the GTC conference, remains unstinting. In a recent blog post, Microsoft encouraged businesses to prepare to be quantum-ready by 2025, suggesting that the journey may indeed be the destination. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
But understand one thing the keynote dazzled. The new projects are way ahead of any other company, and this new industrial revolution belongs to Nvidia. That doesn't mean the stock can't go down. It just means that you can buy happily by the inevitable pullbacks, although when they do happen, remember, they tend to be sizable and brought about by scared shareholders who aren't sure exactly what Nvidia makes, other than sparkling leather jackets and mini Jensens.
In conclusion, the saga surrounding Nvidia is one of both caution and hope. While geopolitical struggles and internal technical hiccups have cast a shadow over its recent stock performance, the company's foresight and dedication to emerging technologies signify a robust potential for growth. As we continue to observe NVIDIA's navigation through intricate challenges, one can only ponder, what are your thoughts on where this tech giant will head next? Your insight might just be the key to unlocking the next chapter. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.